Okay, so in this video, I'm going to talk a little bit about Social Security taxes. So for Social Security, the main program that people tend to think of for Social Security is the retirement aspect of Social Security. And those are going to be paid for through FICA taxes, so FICA. So if you've seen FICA on your pay information and summarizing your gross pay and your deductions and things like that, then basically that's what this is paying for. So under FICA, 6.2% of your wages, provided you aren't earning above a specified amount, is paid by you into Social Security, and also your employer will pay 6.2% as well. Now, there are some limits to that, and basically, I think in 2020 the amount was you were paying that 6.2% on wages up to 137,700. So if you earned more than that, they capped off basically how much they were paying in wages or taxes on those wages. So for a lot of people, they're earning well under 130 some odd $1,000. And so as a result of that, all of their wages are subject to the Social Security taxes. And part of the reason why there's that cap there, if you think about the prior video, normally the amount that they pay out to higher earners is also limited as well. And we'll see in subsequent videos that the total payout is actually capped. So it kind of makes a certain amount of sense that they only tax up to a certain amount, but they only pay up to a certain amount, and so forth. So also, because Social Security Administration administers Medicare as well, 1.45% of your salary is paid for by you into Medicare, and also your employer pays 1.45% as well. And there's no wage limit on that. So however much you earn in wages, you're paying the 1.45% as the employer, and the employee is paying the 1.45% as well. There can actually be, under more recent legislation, some additional Medicare taxes for higher incomes, and also for net investment income in some cases as well. It does bring up an interesting little side note as it pertains to this. So if you go back to the FICA taxes, note that 6.2% of the employee's salary is going into Social Security, and 6.2% is paid by the employer as well, for a total of 12.4%. Now, the reason why that's kind of interesting is, from an economic standpoint, who is really paying the taxes is not necessarily the person who's sending the money. So let's talk about that for a moment. So when a company is thinking about hiring an employee, they have to look at the total cost of hiring the employee. So in other words, their total compensation. So let's suppose the company was offering to pay the employee $100,000, just because the math will work out nice and simply. So if that was what they were offering to pay the employee, $100,000 in let's say wages. Okay, so really the company is going to be paying more than that, right? So they're going to be paying the wages, but they may have various other benefits, health insurance and retirement contributions, things like that. But let's suppose they're going to pay $100,000 in wages, right? So if that's the case, then the employee is going to pay 6.2%. So $6,200 is going to be paid for by the employee. Okay. Now, the employer also is going to have to pay $6,200 as well. So really what that means is, as the employer, they're paying $100,000 of base salary, plus whatever additional other benefits and retirement contributions, whatever else. And they're also paying basically that extra $6,200 in their portion of the FICA taxes. So the reason why this is kind of worth noting is that when a company is thinking about hiring somebody, they're looking at the cost of that total compensation package relative to the benefits that they perceive from hiring an individual. So in a very real sense, that total compensation package offered by the employer is what the employer is looking at as a cost of hiring somebody. Which, what that translates to is, from an economic standpoint, realistically speaking, the employee is really, in an economic sense, probably paying that 6.2% as well, just in the form of lower other compensation. So in other words, if the employer has to pay all this money in order to hire somebody, it doesn't really make any difference to the employer whether they're having to pay that money to the government, or whether they're having to pay that money to an insurance company to pay for medical insurance, or whether they're paying it directly to the employee in wages, it's all part of the cost of hiring somebody. So if the government says the employer has to pay 6.2% of the wages to the employer, that just means that the whole compensation package still has to make sense from a cost standpoint for them, which really realistically means they would probably be willing to offer lower other benefits, whether that's lower wages or lower retirement contributions or what have you, to an employee who's working. So the reality is, in an economic sense, realistically speaking, although technically the employer is sending the 6.2%, the reality is there's a strong possibility that in an economic sense, the employee is probably bearing that cost as well. And that would be true for the Medicare taxes as well. Okay, in any case, hopefully this little video about kind of how Social Security is funded in terms of taxes has been helpful. Thank you so much for watching and have a great day.